Hello everyone, my name is Cameron Stevens and I'm a local real estate agent here in Los Angeles. Today, I'm going to be talking about closing and specifically what the timeline looks like about a week before the actual closing day. I'm going to talk about what forms you'll sign, with whom you'll be meeting, and generally what takes place right up to the final moment of you owning your new home. This is an interesting part of the entire process because different parties that have been working somewhat separately up to this point suddenly have to come together and make a lot of things happen really quickly. So it does take a lot of coordination, which is mostly orchestrated by the real estate agent. It's a lot of work to make sure everyone has all the information and documents that they need, and one slip up can push out closing sometimes up to a few days. That being said, let's get a few things out of the way at a high level and talk about who the individual parties are and what they'll actually be doing. First, you have your real estate agent and their team. For me, I have a transaction coordinator that I work with, but I'm mostly a one-man team. Sometimes your agents have lots of people working together, but I find things are easier if a single agent is your point of contact. It's just less likely to get wires crossed. During this time, the real estate agent will be double checking that all parties have their respective documents, that timelines are being held to, and they will help you coordinate your final walkthrough, which is the point in time where you'll make sure the house is in the condition you expect it to be, mostly checking to make sure that everything is moved out, that there's nothing still left that you expected to be removed, and of course that nothing has been damaged. You want to make sure no holes were caused by getting that sofa out or scuffs on the floors from that table, as well as making sure nothing catastrophic has happened while the house has been vacant, like a pipe bursting or the roof leaking unexpectedly. If the house is in the condition you expected, great. You sign off on a document called the verification of property condition. If it is not, a separate renegotiation happens for any damage or the request to have additional items move out. It is worth noting that you may be non-contingent at this point, which means that you do not have the ability to back out of the sale completely. However, do not fret. You won't have wired your final funds at this point, so this is a major bargaining chip that you can use to make sure the seller does whatever they need to do to get the property in the condition that it needs to be in. And in the case of catastrophic events, there are actually provisions in the residential purchase agreement that can help you out if the damage is very bad, and then you might be entitled to your deposit back. Most often though, a buyer walks through and sees that everything is as they expect it to be and signs off on the verification of the property. The next steps are with your lender. First, you'll lock in your loan, which is a term that basically describes you choosing the actual aspects of your loan and saying, yep, I'm good with these, this is what I want. Most often this means choosing the final interest rate, any points you might be paying that would lower that interest rate, or any credits you'll be accepting for a potentially higher interest rate. You don't want to lock too far from the closing date because interest rates can fluctuate and the loan lock doesn't usually last for more than a week or so. From there, the lender is stepping in and issuing what is called the CD, or the closing disclosure. This is the final version of the nuts and bolts and numbers of your actual loan, and they should look pretty similar to the initial loan disclosures that you signed at the beginning of this process. At this point, however, they will include things like any credits from the seller, as well as final numbers of anything that has been an estimate up to this point, like an appraisal fee or your home insurance. These are types of things that are estimated up front, but for example, now that you've shopped for home insurance and got your actual quote completed, you'll have a real number as to your insurance cost, and that will then replace the estimate. Usually this is something the buyer goes over and signs off on their own, but I always highly encourage you to reach out to your agent if you notice anything incorrect or you have questions as to why certain fees are the way they are. This isn't your final chance to make corrections on different fees and closing costs, but it's very close. So this is where you will want to be very vocal about anything that might be incorrect. Now, lenders can prepare CDs at any time in the process, but since the fees they disclose are heavily regulated, most lenders have a few checks in place before a CD can be sent. First, the loan is at least conditionally approved and in underwriting. Then they have to make sure the appraisal is in and any value issues are addressed. Also, they check that insurance is in, or that the home is at least confirmed to be insurable. Finally, the lender has collected invoices for any loan-related third-party fees, such as a credit report or HOA fees. Now, many times buyers hear about the 3-day waiting period in regards to the CD, and they want to know what that means. Borrowers cannot sign loan documents until 3 business days have passed from the date of the CD acknowledgement or signing, according to government regulations laid out in procedures that are governed by the Truth in Lending and the Real Estate Settlement Procedures Act. If any loan-related fees are added after the CD, a new CD has to be issued, potentially starting a new waiting period. This is why most lenders do not issue CDs until they know that all of the fees or closing costs with relative certainty. Because of this, getting the CD signed about a week in advance of the estimated closing date is very important to making sure that all other aspects of the closing stay on track. You will also at this point begin sending your final funds, which will be calculated by escrow. This is the amount of your down payment plus your closing costs minus your earnest money deposit. Now, remember your closing costs include items that you have to pay as well as any credits from the seller or the lender, which is why credits towards closing essentially function as cash in hand at the close of escrow. The final funds are done by a wire transfer in the exact same way you did your earnest money deposit. After that 3-day waiting period from the closing disclosure, the lender will be drafting and sending final loan documents. This is a behemoth of upwards of 100 pages of paperwork that need to be correct before sending to your escrow officer for signing. Because your escrow officer is the one in charge of all of the money coming in from various parties all the way up till closing, chances are your escrow officer will go back and forth with the lender a little bit just to make sure all of the aspects of these loan documents are correct, so that the escrow officer can balance all of the money coming in for the actual funding. Remember, 2 major sources of money are coming in. Your final funds, which is the down payment and closing costs minus your earnest money deposit, which is already in escrow, and the lender's funds, which is whatever percentage of the purchase price your lender committed to lending on the property. For example, if you put 20% down, the amount coming from the lender will be 80% of the purchase price. Many people wonder how the process of funding the loan and recording actually works. They've heard these terms, but they don't actually know what they mean and what the process is. In almost every instance, the loan will fund on the day before recording. And recording is actually the real transfer of ownership. It's when you know for sure you can get those keys. But funding is basically when escrow confirms that all the money is there and accounted for, meaning your final funds and the lender's funds. See, the escrow is paid to be a neutral third party that gathers all the money and disperses it all properly. Only once everything is in and accounted for can they clear the file to close the following day. With that being said, let's talk about what happens when the loan funds. You will be scheduling an in-person meeting with your escrow officer, and that will be your final signing of documents. This process can take a while, so I always advise clients to budget about an hour and a half to sign everything in full. Always bring a form of ID, 2 just to be safe, because there are multiple signatures that require a notary. In almost every instance, your escrow officer will either be a notary or have a notary in-house that will do this for you. Here you will sign the settlement statement that lists all of the costs related to the home sale. You will also sign the mortgage note stating your promise to repay the loan. And you'll sign the mortgage or deed of trust securing the mortgage note. Don't worry, the escrow officer will walk you through everything, answering questions, advising on anything you might be confused about, and generally telling you to sign here, initial here, etc., etc. I will add that I have had a client recently have a mobile notary come to their house to do the document signing, and I've even actually heard of mobile notaries coming to someone's place of work. But always make sure that the notary is one that's familiar with loan documents. You don't want a random notary messing something up and delaying the closing. The entirety of these documents are sent to the lender, who will review them, and they will authorize the wire transfer of their portion of the funds. If your funds are already in escrow, then escrow can balance and call the loan funded. From here, all of these documents will be delivered to the title company, because the title company is actually the party that handles the recording of the grant deed that you signed as the official transfer of title to the property. They take that big old packet you signed, take what they need, and they handle the recording the following day. Okay, so we made it to recording day. In Los Angeles, the county recorder's office is handled by a lottery system. You could close as early as 9 a.m. or as late as 4 o'clock in the afternoon. Generally speaking, if you are all set to record the day before, there really is nothing that can prevent you from closing the following day. Rather, it's just a matter of what time in the day you record. You will get an official notice of recording from your title officer or from your escrow officer who has been informed of the recording by the title officer. And that, my friends, is when you can officially celebrate. That is the moment in time when you are now the new legal owner of the property. Now, I do want to go over a few little outstanding things about the very end there. First of all, the close of escrow date is just an estimate. There are many things that can go wrong during this process that involve delays, and because of the legal red tape surrounding a mortgage loan, especially as it relates to the government. Even more so, at this time when interest rates are low, mortgage companies are swamped with new loans, as well as refinances, and, it's crazy out there right now. So human error or work volume can cause the close of escrow date to push, and even though we try our best to prevent that, it can happen, and it does happen, and everyone really just kind of has to be okay with that. Finally, an important note. Ideally, you want to have your close of escrow date Thursday or earlier in the week. That is because if you close escrow on a Friday and you have to push, your close of escrow date now becomes the following Tuesday. What? That doesn't make any sense. That's 4 whole days later. Why would it be that much longer? That's because of this. When your loan funds, you're calculated to begin interest payments, which show up as prepaid interest on your settlement statement. But you don't actually own the house until recording, and the county's recorder office isn't open over the weekend. So, in theory, if you funded on a Friday and closed on Monday, you would be paying interest over the entire weekend on a house you don't legally own. And who wants to do that? Therefore, if a property is scheduled to close on a Friday and has to push, you instead fund Monday and close Tuesday. As you can see, there are a lot of moving pieces that have to come together at the very end of this process that can take a lot of effort to coordinate. Imagine a scenario where one buyer or one seller is out of state, or even out of the country. Now you got to get documents that are being notarized, overnighted from various places, and that adds another layer of complexity. I can't stress this enough. This is why it's important to have a great real estate agent that can help throughout the entire process. And make sure all the other parties you work with are excellent if you're the one who gets the opportunity to select them, or making sure they're doing their job and staying on track, if you didn't get to select them. Whew, that's a lot of information, right? Look, I'll admit it myself. Closing is a lot happening at once, but the other side is a big sigh of relief and keys to your new home. I hope this information is helpful to you. And I'll say this, I really do love helping people through this process. So if you know someone who is interested in purchasing their first home, please don't hesitate to reach out. I would love to chat and answer any questions that they might have. So there you go. Thanks for watching.